now is Peter Switzer, the founder of the Switzer Report. Peter, great to see you. We've had a bit of data to mull over this week. Locally, we've also seen some pretty big moves overseas as well. Take us through the negatives and positives of the week.
Well, I think the bads was definitely the NAB business confidence falling. And then on Wednesday, we saw the Westpac consumer sentiment number go from positive to above 100 to below 198, which means that the pessimists are outweighing the optimists. Now, sure, those surveys were around the poor growth number we got last week and also the headlines around recession. But still, it's not a good thing to see that confidence is falling both for business and consumers. And the motor vehicle home loans, motor vehicle loans are at a 4-year low. So putting those together didn't make me feel that positive. Then along came, well, we started the week with the very high auction clearance rates, and then the value and the number of home loans increased by 4 to 5%. So it looks like the housing sector is coming back, so you can be positive about that. I think also Donald Trump cutting the Chinese some slack, delaying the tariffs for 2 weeks after October 1. I think that was a positive the stock market liked. And then Mario Draghi came out last night with basically a bazooka, promising to throw 20 billion euros at the European economy by buying bonds for as long as it takes, basically, and then cutting the effective cash rate over there down to negative 0.5%. It's really, he's actually famous for whatever it takes, and that's exactly what he's doing. And I think the last thing I'd throw in, as there's a positive, of course, is UBS came out early in the week and said that they think that the September economic growth number for Australia will be 0.8%. So it's coming from 0.5 to 0.8. And I think the year for 2019 will finish at 2.4%. Now, we all got worried at the 1.4% number last week. For UBS, and these guys aren't like me, they aren't always positive. So I was really happy to see that 2.4% prediction. I hope they're right.
OK, well, let's unpick that just a little bit. UBS, as you say, aren't always this positive about things and the outlook. What are they basing that optimistic assumption on? Yeah,
the tax cuts. They think the tax cuts really haven't hit.
Which is what Josh Frydenberg's been saying.
Yeah, well, it's interesting that UBS come out. Clearly, the interest rates are a slow burn, those cuts, and there's clearly working in the housing sector. Those auction clearance rates would not have happened unless you'd seen those cuts in interest rates. But the tax cuts, UBS think, will be very significant, and that's why they're predicting the September quarter will be 0.8% and the year will finish at 2.4%. So that's a very interesting observation. I didn't think the tax cuts would be so effective, but certainly the UBS economics team do think exactly that.
But why, Peter, is it that we haven't seen the full effect of those tax cuts yet? Is it because people don't have the money in their bank accounts yet? Because I think some, $3 or $4 billion was paid out within a couple of months, and maybe people aren't like me. As soon as money hits my bank account, I spend it. But perhaps people aren't doing that, and they're waiting and they're spending a little later.
I think also you're an organised person, and all the people who've got their tax returns in are really organised. I think a lot of Australians just basically go and do their work, and all of a sudden the tax return bobs up, and they look at it and say, oh, gee, $1,000. I might go out and buy myself a new TV or go on a better holiday or upgrade from economy to business class. Those sort of things are a slow burn. But I've got to say, if we don't see something significant by late September, early October, I think the Reserve Bank will get really nervous and probably cut either early October or on Cup Day. The flip side is if they start seeing these tax cuts translate to better retail sales, they might hold back, particularly if Donald can get a trade deal. And, of course, that's, to guess that, you have to be a psychiatrist, not an economist. Yeah,
and you have to be an analyst of Twitter and keep across that very closely, look at every word. Now, you mentioned that the housing market, that it is looking pretty good at the moment. Is it kind of out of the doldrums? Is it all up from here?
Yeah, look, I've interviewed Louis Christopher from SQM Research and also Cameron Kusher from Core Data. Cameron thinks we're on the way up, but a little bit more cautious than Louis. Louis can actually see a 10% rise in house prices, for the 12 months going forward. And if that's the case, you've certainly got a turnaround in the sector. Look, I really do believe that the critical issue is going to be the trade deal. If you get a trade deal, Laura, we can see the stock market go up 10%, and that will have a confidence implication for both consumers and business. It could be a really big snowball. Then I think Louis would be right in terms of what could happen to house prices. And the Reserve Bank, of course, would love not to cut interest rates again. So, look, it all rests, I think, and ultimately what Donald Trump achieves. And by the way, the one negative story I heard recently was the one that you ran with, namely that Donald Trump is talking about negative interest rates in the USA to compete with Europe on currency. We do not want a currency war. That'd be the worst possible scenario. And would be the kind of scenario that we saw with the Great Depression. You had this tariff wars with the Smoot-Hawley tariffs. Then you had currency, competition and stuff like that. That's the last thing we want to see. So my fingers are crossed that over October we see a trade deal, and that would really turn confidence around both for business and consumers. And I think would put us in a really good stead for 2020.
And that's why we've seen this joint statement led by Australia with Josh Frydenberg and G20 Finance leaders this morning. It's published in the Australian newspaper. That's what we're covering this morning too. Peter Switzer, appreciate your time as always. Good to see you.
Cheers.